Stocks are going up while bombs are being dropped down. Is it a good idea to be buying stocks and trading during wartime? We'll find out. Oil prices surging to new highs. Is this a time to buy, or should you just let it play out? And finally, is crypto back?
Oh, here we go again.
As always, welcome to Nova Street Finance. Today we will look at the broad market, come up with trades, and get you enough money to take your girl to Wendy's or splurge on some new golf clubs. Today, we'll go over my trades. And as always, make sure you subscribe. And for additional resources, link is in the description. Now, let's get into it.
Sitting down 875 points.
We've now broken down 10,000. The Dow Jones Industrial Average dropped more than 900 points.
Market didn't work. It broke down. The machines broke down.
Fear came back into the market in a very big way.
Now, before we start, let's go see how the portfolio has been doing. So, as you can see, in 6 months, we are up 16K. And honestly, I have been trading so bad. What I really want you guys to look at, right, is the realized gain and losses. This is a really big indicator on how my trading is going. And the current month, right, so in 5 days, we managed to make around $1,000, right? But let's concentrate on about a 1 week span, right? So let's go to February the 26th, start on the 24th. So let's give us basically, right, in a week's trading, right? Let's look at that. So in about a week, I've been able to make $1,500. And why this date is so important is that this date is the day I said, okay, let's start taking our trades to a new level. Let's start putting on more risk. Guys, everything in life is a risk, right? My goal one day is to get to around 1 to 5K in profit a day. Since this day, right, since the turnaround, right, before this day, we've been averaging a grand a month. But now, right, you can see as I have stepped up my trading. I took a couple losses out here, right? But so far, I've been able to have a 75% win rate. And these little trades are what I'm best at, right? Just these little trades. I know we have trades on Netflix, IGV, Ethereum, right? Just these little trades will go a long way, right? You don't need the big home runs. Concentrate on the little stuff, right? And you'll see this go up. So looking at this, right? So basically in 1, 2, 3, 4, 5, 6, 7, 8. So in 8 trading days, I was able to make about $1,500, right? So right now, I'm basically averaging 200 in realized profits, right? So, and this only counts the trades that we closed, right? We opened and closed, right? If you look over here, right, you can even see I made 205 today on these little trades. But these are not accounting like some of these trades I have going on that has an open P&L of 400. We got 300 right here. This is basically like a bond, so this is not really a loss. I just got paid $40 in dividends. Then we also have some trades right here, right? So it's not counting all this, right? So if we close some of those trades out, it would show up over here. But basically, all my day trades, I've been able to get around 200 a day. So I'm 20% there, right? And how am I going to scale this up? Easy, right? Why I like trading so much, right? To scale up a business, you got to open up more locations. You got to do a bunch of different stuff. Like if you're in real estate, you got to buy more houses. To scale up trading, right? All you need to do, right, So let's say I've been trading options. So basically if I have one contract, right? Basically I have one contract, right? To scale it up, I just get 2 to 3 to 4 to 5. And the more you scale that up, the more this number goes up. So right now I'm using 2 contracts, right? If I had 4 contracts, this would be $3,000 profit, right? I would have a $3,000 profit. If I was using 6 contracts, right? I would have 4,500, right? So it's kind of easy to scale up, and obviously I've been trading really, really good. You don't need to win every single trade, right? As you can see, but you got to win at least most of them, and I know what I'm doing. So soon, right, when I get more comfortable at risk, you could just make that 6 contracts, right? You can make that 10 contracts, right, per trade. So that's what I really plan to do. But yeah, this was the date where I was like, okay, said, you know what you're doing. Put on more risk, and been having really good results, right? I wish I could trade tomorrow, but I'm going golfing with my boss. But yeah, 200 a day is not bad. We need to ramp that up to 1,000 a day, which is pretty easy because all we have to do is just move that up. Do the same exact trading, just move this up and down, right? Okay, so this was the profit and loss, right? Let's go to the charts, right? We talked about buying stocks in wartime, right? So this bar and this bar represents the United States' previous war, which is the Iraq War, right? So in this time, obviously you can see that, stocks still go up in wartime, right? Stocks still go up. At the start of the war, you did get a little bit of a down move, right, to the end of the year, but as long as you keep on buying the S&P 500 or other really good stocks, right, you're going to make all your money back and more. So looking at where we at right now, you can see that, it looks like it wants to go down here just because of the war. But even if that happens, like you can see all these other times, right, it's just a buying opportunity. So how to basically trade this, right? What I would do if I was trading this, right, I would get off the weekly chart where every candlestick is a week. I would go to a daily chart, right, where every candlestick is a day, and I mapped out these levels. We've been literally trading in a range for the last 3 months, right? What I would do basically is I would be selling put credit spreads down here, right? And basically what a put credit spread is, right, you pick a price where you think the stock is going to be above, right, and you sell that strike, right? So in this trade, let's make a trade where we think it's going to chop around some more because the war has a lot of uncertainty, right? We think it's going to chop around, right? We think it's going to keep on doing something like that, right? So we can make a trade like I've been doing, targeting, hey, I think it's going to be above this. And how we do that is step 1, right? Go to trade, right? Step 2, right? I'm going to close all these, right? Step 2, close this too. Step 2, pick the day you think at least it'll stay above, right? So do you think it's going to stay above 660 in 15 days? For options, you have to pick your expiration date. You don't have to hold it for 15 days, but you're just basically picking the longest you can hold it, right? So let's say in 15 days, right? Let's say 43 days, actually, because I have a position in here, actually. We'll map out my position, actually. I have an existing position. So right now, I sold the 610, then I bought the 600, right? So basically, to put that in English, right? And I have to go way down here. So look at that. So basically, to put it in English, my trade was I sold the 610, right? So I sold that. So I basically saying in 40 something days, I think SPY, right, this S&P 500 will stay above 610. And if I do that, right, if it stays above 610, I receive 100% profit, right? 100% profit. But honestly, I need to readjust that trade because the risk reward, it's all right. You don't really, since it's such a big probability of you making money at 610, it doesn't really give you that much money. So I may roll it into something like, let's see, I may roll it into something like, let's go back to the 660. We'll make a trade targeting the 660. So I'll go to trade. We'll go to 43 days. We will sell this 660 because on a put credit spread, the first thing you want to do is pick what number, right? What price do you think the stock or ETF will stay above? In this case, we think it's 660. We're going to buy protection because a lot of y'all can't sell naked stuff because you don't have the clearance for it. I actually do, but for this case, right? And it's kind of expensive to sell naked because you need to put up a lot of margin. But we're going to buy protection, right? So we'll buy the 655, right? So basically you'll receive $102 for this. Now, if that's not enough, right? You can redo the trade. You can sell the 660. And if you wanted a little bit more, you can buy the 650. And then you receive almost $200, right? $194. I feel like this trade is something anybody can put on, right? So it's 5 with, right? So you need $500 to enter this trade. You're receiving $102. So the most you can lose, right, would be that $398 right here. Now to put that trade in English, right? We sold the 660, right? So in 45 days, we want it to stay above this line. Then we bought the 655, right? We bought that. So we sold this, then we bought that. So we received $102, right? We received that. Boom. Then the most we can lose is $398, right? Boom. So we put it on. We want it to stay above 660, and if it does that, we make our $102. So when you put on the trade, right, this is your max profit. You don't automatically just get this. That's just saying at expiration, right? Next day, let's say the thing goes way up here, right? Let's say it goes to 685. Now, to note, you don't just make $102 right when you put on the trade, right? Your profit starts at 0, then it slowly climbs up to 102, right? But let's say tomorrow this thing goes to 690, right? Let's say tomorrow the market shoots up to 690, right? Doing that in the first day of this trade, you'll probably be up like $55, right? That was a horrible looking 55, but that's $55, right? Then after a day, you can take off the trade. You don't have to wait the full 45. So that's the good about these trades, right? You can take it off at any time. And then worst case, right? Let's say tomorrow this thing goes way down here. Well, you don't automatically lose the whole 398. If it goes down here, you'll probably be down $70, right? Just because the trade started off, it's your first day of the trade. The trade makes money as time goes by and if the stock or ETF goes up. So even if it goes way down here, you won't be down that much, right? For you to be down this whole 398, this thing would have to tank way to like 630, 640 on the first day, which it's at 681 right now. So it's not really likely to happen. But yeah, this is a trade that I probably will get into tomorrow if I have time to trade. Honestly, for me, what I would do, right? This is for like a beginner friendly trade. What I would do is I would put this same trade on, but let's say it goes way down here. Right when it hits 660, I would close this for a loss of like maybe $90 at the time. I don't know how down you'd be, but let's say you'll be down about $90 if it goes down here tomorrow, which is manageable. I'll close out the trade and then just buy the ETF, right? I'll buy probably like 50 shares of this, or 30 shares, or 10 shares, right? I'll just basically treat it as a cash secured put. If it goes down, I'll just buy it because we know long term this thing is going to go up. So if it goes down, I'll buy it. If it goes up, boom, I'll just keep my $102, right? So it's basically a win-win for me. That's how I basically trade it. Whenever SPY goes down, the S&P 500, I buy. If it doesn't go down, I just keep my 100 or whatever amount of contract. I just keep whatever, right? In this case, it would be 102. But this is for, right? This is for one contract, right? If you got 2 contracts, this would be 204, right? If you had 10 contracts, this would be about around $1,000. So no. So we can even try to let's even look how much contracts you can get, right? So that's for one contract. Let's say you got 20 of them, right? Which you can, right? Max profit $2,000, right? Max profit $2,000, and you're gonna risk $7,000, right? I mean, you can get as much as you want. You can get 100 if you want, right? Boom, you can get as much. The good about the thing about the stock market, you can get as much as you want. $10,000, right? In 43 days, right? $10,000 to stay above 660, which honestly, right? Looking at this, it looks like it does want to stay above that. So if you have the money to, right, you can just say, I think it's going to stay above here, and then you'll make 10K, right? And then you'll finally have enough money to go to Wendy's, right? Boom. You won't have to go to McDonald's. You can go to Wendy's and actually get a good burger, and then after you eat the burger, that's gonna be you. You're gonna be smiling, right? Let me draw what you'd look like. You'd look like this. Watch this. This is what you would look like after you made 10 grand. I'd give you a hat. You would have enough money to go buy a hat, right? Economy is so bad. Look at egg prices. You can't go buy a hat. You win this trade, you get that money. You go to Wendy's and you get a hat. Boom. Looking at oil, this thing is just shooting up because what's happening with Iran. Oil prices go up. Bombs. Let's draw an airplane. This is going to be half a drawing channel, right? This is an airplane. Gosh, this is a horrible airplane. How do you draw an airplane? Oh my gosh, that was horrible. Let's draw the ground. Oh, hold on. Let's draw the ground. This is going to be ground. Let's draw a building. Let's draw a window. Let's draw a door. Boom. Let's draw a bomb. Let's get a bomb in here. How do you draw a bomb? What the fudge does a bomb look like these days? Let's say this plane had a torpedo. Let's draw a torpedo. How the hell do you draw a torpedo? Draw the... Holy moly. Anyway, bombs go down, oil prices go up, right? Until this crisis get averted, I think oil's probably gonna keep on rising or stay in this level, right? So what can you do? How can you trade bombs down, oil up, right? How do you trade this? Well, we're gonna do the same thing. We're gonna do another put credit spread. This time we'll say, I think it's gonna stay above 90, right? Think it's gonna stay above $90, right? We think this crisis is gonna keep on going, and I think it's gonna keep on rising, or we think it's gonna keep on rising, right? Or at least stay elevated, right? How do you trade that? You go to trade, right? You pick how many days, right? Let's say in 6 days. I think this crisis won't be done. I think crazy stuff is still going to happen in 6 days. It's still going to be there, right? So we sell, step one, sell whatever price you think it's going to be. We sell that, and then we can go 5 with again, right? So 90 minus 5. We're going to buy protection at 85, and boom. Again, you make 92. This is for one contract. You make $92, right? And you risk 408, right? But you don't really lose. Don't think of like, oh, that's a lot of money. You don't really lose all that. It would have to crash pretty big for you to lose that. And then remember, you can get out at any second. So don't think you just lose 400, bro. We'll map that out, right? Let's map it out. What did I sell? The 90. So put this trade in English, right? We're targeting 90. We think it's at least going to stay above 90. The stock is trading at 96 right now, right? So I think we said in 6 days, right? So in 6 days, it needs to be above here. And then if that happens, we can keep our full, no, that was horrible. We can keep our full $92. And then we're going to have to put up, though, $408. My goodness, that's horrible. We're going to have to put up $408. So to me, that's a pretty good trade, right? Like I said, even if it goes down here, you won't be down the full 408. You're probably down 60, 70 bucks, right? You'd have to see something way down here for you to be down the full 408. So it's a pretty good trade, I think. I'm probably going to try to put this on tomorrow. Going to crypto. Let's check out crypto. Going to crypto. Going to Bitcoin. Delete this. I mean, crypto is looking like it wants to come back, right? As you can tell, the last couple of days, each bar, see here a day, each bar is a day. So, honestly, since the 24th, right? Since the 24th, I mean, higher, lower, higher, lower, higher. I mean, this looks like it wants to explode. I mean, if I could visually represent crypto, it would probably look like this. Yeah, it would probably look like that. Breaking in a house, right? We're breaking back. Crypto bros are back. They're going to Miami. Crypto boys are now going back to Miami, and they're getting a section at Live because it's coming back. Right? You see here, they got evicted from Miami. All the crypto boys have been evicted. But it seems like it's coming back right now. So let's map out a trade that we think crypto is going to keep on exploding, right? We're thinking crypto's back. We're all moving to Miami, right? I think one trade I would do is just buying a call, right? When you buy a call, basically you have no upside, right? You have no upside risk. You can just keep on making money as long as it goes up, right? The other trade, right? The max you could make was like $100 as long as it stayed above this. Here now you can make, if this thing goes to 1,000, you'll make $1 jillion, right? There's no cap on how much you can make, right? So to do that, we'll go here. Let's say we want 15 days, right? The price is at $40. So let's say we think crypto, actually let's go to 43 days. Let's say in 43 days, we think Bitcoin will rise, right? This doesn't represent the real Bitcoin price. It just tracks Bitcoin as a stock, basically. So let's say Bitcoin's going to keep on rising, right? We can buy this call, right? $50 call, and all it's going to cost us is $45. So the most we can lose here is $45. So basically going here, target the 50, right? And the most we can lose is $45. So this is the problem with this. If this thing does not go here very fast, you're gonna just lose your whole $45. It's actually hard to just make money doing this, because if it does something like this, you lose money. If it does this, you lose money. Even if you get your move, you'll probably be up like 40, probably not 40, but you'll probably be up 100, $200, which you can take profits. Then if it starts doing this, starts messing around and going down, I mean, you just lose everything. But if you think it's gonna explode, right? Let's say you buy this 50 strike call, explodes to 50. Let's see how much you would be up. Do this, go to end. All right, so looking at the profit and loss on this, let's say by April of this thing, that's why I hate buying calls. Let's say it goes to 50, right? So let's say your stock goes all the way to 50. You'll be down your whole 45 bucks basically, right? You'll be down the whole 45 bucks. Forgot I had. Let me take off my trades. You know, the stupid thing about buying calls, right? Looking at the profit and loss, even let's say at expiration, right? So let's say April 17th, you hold this, right? And it finally goes to 50, right? It finally gets, where's 50? It finally gets way up here, right? There's a problem with buying calls. That's why selling puts is way better. You'll be down your whole 45 bucks you put in, right? You would literally be down. You would need it to get to 51 to start making money, right? You need it to get to 51 to make 55 bucks, right? I mean, granted, if this thing goes to 100, right? In 45 days, I mean, you'll be up $45 would turn into damn near $5 grand, right? But you would need, I mean, gosh, look at that. You would need something crazy for that to happen. I mean, you would need this thing to go past all-time highs, which is probably not going to happen, right? But if it did, right? Let's say you did that. Let's say you had 10 contracts. I mean, $450 turned into 50,000. That's the good thing about calls, though. This thing can go as far as you want, right? Let's say Bitcoin, the ETF went to $1,000 per share, right? You'd be up $1 million. No, yeah, you'd be up $1 million almost from 450 bucks, right? That's the good thing about selling calls. I mean, that's the good thing about buying calls, right? Good and bad thing. You can make unlimited money, but that thing would need to just explode, which is probably not going to happen. But for me, I'd rather sell puts and like have something capped because I know when to take profits, right? As always, thanks for watching. Comment on what you want to see, right? Comment what I could do better. Comment if I can explain. I'm sure I can explain things better. I need to definitely dumb it down a lot more. But comment, let me know how you liked it or didn't like it. Let me know, comment what you order at Wendy's down in the comment section. Well, I will see you on the next one.